Welcome back to another strategy testing video. And in this video, my focus will be on the MACD divergence signals. So what I mean by that is I am not going to be focusing entirely on the bulk of the MACD indicator. I am not going to give a description of how it's used, how it's a combination of various different moving averages. Nothing like that. What I'm interested only is divergences. So when the price moves in one direction and the indicator moves in another direction. This is a popular strategy. It's a popular way to use various different indicators actually as well. But in this video, I want to put it to the test and see how it actually performs with real life data. So towards the end, I'll show you the results that I have generated testing it on the last, however long it takes. Let's go into a little bit more details here. So here you see a couple of different MACD indicators. And I mean, a really popular one, I think the default one on MetaTrader is the one with the histogram and the one line only. I'm not going to use this. I mean, I just think, well, it's pretty ugly and it's the most difficult one to use. Then I have the MACD indicator. It's an okay one, especially if you're trading crossovers and you're not looking at the histogram. But I'm going to use the third one, the MACD with the histogram. I just find it much more pleasing to the eye, and for me personally, I find it easier to spot divergences. So the way that we're going to trade this is there are two divergences, a bullish one and a bearish one. So here's an example of a bullish one, which will provide you a buy signal. As you can see here, we have a series of lower lows, and the trend looks to be going down. But when we look at the MACD indicator, we see that these lows are higher. So we have a series of higher lows and the trend seems to be going up. So we have a clear divergence here, which means that around about here, we're going to enter the trade. This is our buy signal. Doesn't matter if it makes a big move. We have the divergence here, which means good things to come, hopefully a reversal and the price is going to go up. So here's our buy. So this is a bullish divergence. Now let's have a look at the bearish divergence. So what happens here is the price action, we see it's making a series of higher highs. However, the MACD indicator is making a series of lower lows. So if we put a trend line here, we can clearly see the price is going up while the MACD indicator is going down. Once we see it, we have an entry signal here, which we sell, and then the price should go down. So a bearish divergence will result in a sell order. So going short. So here are the strategy guidelines that I'm going to use. So I'll test the strategy on the Euro Australian dollar pair. The time frame for my charts will be 15 minutes and I'm going to set a start date for the 1st July 2022. And I'm going to be trading in a live environment. I am not going to be able to see whatever happens with the data, and I'll show you how that works in a second. Risk reward ratio, I'm going to use 1 to 1.5. So what that means is that if I put a stop loss 10 pips above, then the take profit level will be 15 pips. And then the stop loss level will be the previous low or previous high. So here's another example of the risk reward ratio. So we see a divergence here. It's time to enter. This is a bearish divergence because it's making higher highs, but the MACD signal is making lower highs. So we go short here. Now the stop loss, I have used the previous high point as the stop loss. So if this is 10 pips, my take profit will be 1.5 of this amount, 15 pips. So the take profit will be here. You can't really see it, but this is 1.5 R. I have just to show you, I have generated it so that you have the 1 R here, 1.5 R here, and 2 R here. For the purpose of this video, I'm using 1 to 1.5 R. Okay, let me show you how this works in real life. Here I am at MetaTrader 4, and let me create a new simulation. I'm going to select Euro AUD. For the start date, I will select 2022 and the 1st of July. Here I'm going to select the New York close, and I'm going to preload the chart with, say, 150 days back. Okay, let's start the simulation. And I'm going to use the 15-minute chart. Now I need to format it to show my MACD indicator. Okay, and here we are. So I'm using 15-minute charts. chart is standard, not adding anything to the main chart. And here's my MACD indicator with the histogram and the 2 lines. So let's get started. What I can do is I can either move the bars one by one by pressing the space bar or clicking here, or I can select here number of ticks per second and just click on here, play. And it's going to show me the data in real time. So I will do this right now and fast forward until I see my first actual setup. Okay, here I have found something. Let me just move it a bit. Now, technically, we have here lower lows and here. So for this particular setup, I'm going to enter a trade. So I'll put it 60 will be the stop loss and 90 will be the take profit. So just to show you visually how this would work, here's about 60 is here. And then the take profit will be 1.5 of this amount. 1.5 take profit is here. Let me enter it and let's see how this plays out. Not so good. Okay, just wanted to pause it right there and bring something to your attention. Everybody says test out a strategy on at least 100 trades, which is all nice. However, for this particular strategy, I'm already on the 15th of July and so far I've only seen one setup which turned out to be a failing setup. Okay, let me continue searching for more setups. Here we see higher highs, but the MACD indicator is going downwards. So even though it has just moved here, and sometimes when you will see these types of setups, you may enter them late. So the stop loss will be at, let's say 50, which means that my take profit will be 1.5 R, which in this case would be 75 pips away. So I'm going to sell and let's see how this plays out. And we have a winning trade. So this is the first winning trade of this testing video. And it's on the 26th of July. So almost a full month has passed since I started testing. We have here lower highs. But if we look at this, this could classify as a higher high on the MACD indicator, which might give me a hint to enter and go long. And I think I'm going to enter it. Here's the previous low, which is, let's say 33 pips away, which means my take profit will be about 51. Let's buy and see how this plays out. Not good. Doesn't matter, let's continue testing. Here's another setup. We have a lower lows here, and these lows are making higher lows. So again, it looks like a good time to enter. So here's what I'll do. I will set the stop loss again, a little bit, let's say below here, and take profit 1.5. So let me measure it. It's about 22 pips stop loss, which means 33 pips take profit. Let's buy and let's see how this works. Okay, very quick loss. Doesn't matter, keeping positive. I have seen so many YouTube videos that are showing this strategy to be absolutely amazing. So let's see how it goes further on. Okay, so it seems that my simulation has come to an end as I only set an initial 5-month period and it's the 2nd of December and my data flow stops at this point. So let's have a look at the results. So I can just go to trades and through this platform I will get to see a history of all of the trades that I've set up. Here are all the closed trades. So as you can see, over a period of 5 months, I only managed to make 20 trades. 20 trades is pretty insignificant to come to any proper analysis or decisions. However, what I think we should highlight is the fact that it took us 5 months to find trade opportunities, and this was assuming that I would be sitting in front of a computer and seeing all of the price action in real time. So the results from this is, now realized profit and loss, this is not accurate because I was adjusting the stop loss, so each order had different pips. The reality is, I have created a spreadsheet here. So the reality is that for each position I would be calculating to make sure that it's a 1R equals 1.5 reward. So for example, if I would be betting say $10 for a win, I would win $15. For a loss, I would lose $10. So after 5 months, I completed 20 trades and I had 10 profit trades, 10 losing trades, which gives me a win percent of 50%. So let's say I had an account and I was risking $10 for every single trade that I entered. After 20 trades, I would have a positive balance of $5. So how do I feel about this strategy? Personally, I don't like it. And I don't like it because it doesn't produce many entry signals. And when it does produce entry signals, I mean, it's a flip of a coin. One way that you could make this easier is if you download a MetaTrader indicator that automatically detects the MACD divergences. But nonetheless, this isn't a strategy that I will personally use. I just don't like it, and I just feel that you would have to be examining charts all days, and a lot of these divergences, it would be, I think, subjective. You would have to look at the chart and then decide, okay, do I like this divergence or do I not like it? Nonetheless, thank you for watching. Hope you found this video valuable. If you have any suggestions how to improve this strategy, feel free to write them down in the comment section below. And if you want to be updated about any other videos that I released, just subscribe to my channel.